So imagine a tech company pulling off like a highly successful financial quarter, right?
Mm-hmm.
They prove they're on the brink of this massive hyperscale growth, and then, well, the market just immediately punishes them for it.
Oh, yeah, it happens all the time.
Stock dips, the algorithms sell off, and casual observers walk away thinking the company just completely failed.
Exactly.
Well, welcome to today's deep dive. You, the listener, actually sent us this really fascinating, highly specific financial note regarding Applied Optoelectronics, Inc.
Right, or AOI as it's known by its ticker.
Yes, AOI. And it is, this note is just incredible.
It is a phenomenal piece of analysis, honestly. It totally cuts through the immediate noise of the earnings report.
Yeah.
And it isolates this massive disconnect between what the market thinks is happening and what the physical reality of the tech landscape actually looks like right now.
Right, and we are diving straight into that disconnect today because the note you shared analyzes AAOI's recent earnings and points out that the results were, quote, extremely positive so far.
Which is funny because that reality ran completely counter to the market's reaction.
Completely counter. So our mission today is basically to play financial detective. We're going to decode the hidden signals in this data, translate the underlying science of optical networks.
Which gets pretty wild.
Oh, very wild. And unpack what the data calls a 2027 hyperbolic forward growth story.
Yeah, and in an era of just absolute information overload, the real edge comes from knowing how to look past a 90-day earnings window.
Right.
The market is notoriously terrible at this. Trading algorithms are programmed to react to immediate revenue misses or, slight guidance shifts.
They just don't see the big picture.
Exactly. They lack the capacity to understand the physical mechanics of building long-term tech infrastructure. So our job today is to find the signal in all that noise.
Okay, let's unpack this, because the data makes a very bold claim right out of the gate.
It really does.
It emphasizes that AOI is one of these 2027 hyperbolic forward growth companies. And because of that, the analysis basically argues that nobody should really care about the current financials.
Which sounds crazy at first.
It sounds totally crazy, because my immediate reaction is to push back on that logic. Isn't ignoring a company's current balance sheet exactly how investors get completely burned?
Usually, yes.
Like, we've all seen the pitches, right? Oh, ignore the cash we're burning today. We're going to change the world in 3 years. That usually sounds like a massive trap.
Oh, for sure. It is very necessary skepticism to have. In the vast majority of cases, ignoring the current balance sheet is just a fast track to disaster.
Right.
But what's fascinating here is the specific timeline and the specific word being used in the note, which is hyperbolic.
Hyperbolic.
Right.
Yeah.
So we aren't talking about linear quarter-over-quarter percentage growth. Hyperbolic growth describes a curve that runs flat for a long period of time as heavy investment is made, and then boom.
It just shoots up.
Exactly. It shoots nearly straight up once a critical threshold is crossed.
Okay, so essentially, judging a 2027 forward growth company by its financial snapshot today is, well, it's basically like judging the value of a 100-story skyscraper when the construction crew is, still excavating the bedrock.
That's a perfect analogy.
Right, because if you walk past the site, all you see is a giant, extremely expensive hole in the ground filled with heavy machinery and mud.
Yep, just mud and dirt.
And if you judge it purely on what is visible that exact day, you might think, wow, this is a terrible investment. You are entirely missing the architectural blueprints.
Exactly. The market suffers from this severe timeline myopia.
Yeah.
Wall Street analysts are essentially walking by that construction site and complaining about the mud.
Right.
They are looking at a 90-day window for a company that is building the physical foundational infrastructure for global data networks. You just cannot build the walls of a skyscraper until the foundation is set.
And pouring that foundation takes years of heavy capital expenditure.
Exactly. So the analysis is urging a shift in perspective. Stop looking at the mud on the ground today and look at the structural capacity being built for 2027.
Okay, but if we suspend our reliance on the standard 90-day financial scoreboard for a moment, what is the metric we actually should be tracking?
Good question.
If the revenue hasn't hit the hyperbolic curve yet, what is the physical proof that this metaphorical skyscraper is actually going up?
Well, this brings us to the core underlying signal, the critical piece of operational data that the short-term market just completely overlooked in the earnings report.
And the data points explicitly to manufacturing capacity here. The text notes that AOI recently had a capacity of 100,000 units per month for 800 jet transceivers.
Which is massive.
And furthermore, it projects that significantly larger growth is expected starting in Q3, specifically because this new massive capacity comes online. Let's break that down, because 800G transceivers sounds incredibly abstract.
It does sound like sci-fi jargon.
Yeah, so what actually are these things?
Okay, so an optical transceiver is essentially the ultimate translator for the internet. Inside a data center, computers process information using electrical signals running over copper wires.
You're right, the standard stuff.
But when that data needs to leave the server and travel across the building, or, across the country, electricity over copper is far too slow, and it degrades way too quickly.
So it needs to be translated.
Exactly. The transceiver takes that electrical signal and translates it into pulses of light, shooting it down a fiber optic cable.
And the 800G part of that equation refers to the speed, right? 800 megabits of data per second.
Correct. Moving 800 billion bits of data every single second through a laser.
That is just, it's insane.
The physics involved in this are mind-bending. You are dealing with microscopic lasers that have to be perfectly aligned with fiber optic strands that are thinner than a human hair.
Wow.
And they have to operate at these blistering speeds without overheating or dropping a single packet of data. The jump from the older 400G technology up to 800G isn't just a simple software upgrade.
It's an entirely new beast.
It's an immense physics and manufacturing challenge. I mean, heat dissipation alone in these server racks is a massive hurdle.
So hitting a production capacity of 100,000 of these complex units every single month is not just, a casual operational update.
Not at all.
It requires extreme precision. Think about it like trying to assemble a complex mechanical Swiss watch, where the gears are microscopic, but you are required to do it at the speed and volume of a massive automotive assembly line.
Yes.
If there's the slightest vibration on the factory floor or a tiny defect in the supply chain, you ruin an entire batch.
And that right there is why hitting this 100,000 unit milestone is the actual trigger for the hyperbolic growth story.
Right.
In hardware manufacturing, moving from prototyping or small batch production into massive, reliable scale is known in the industry as the Valley of Death.
The Valley of Death. That sounds intense.
It is. So many tech companies design brilliant hardware in a lab, but they just go bankrupt trying to build it at scale.
Because it's just too hard to mass produce.
Exactly. Yields drop, raw materials get delayed, robotic assembly machines fail to maintain tolerances. By proving they can output 100,000 units a month, AOI has survived the Valley of Death.
They've successfully excavated the bedrock and poured the foundation.
Precisely.
This raises an important question, though, because, wait, how do we know they aren't just building 100,000 transceivers that will sit in a warehouse gathering dust?
Oh, right.
I mean, building the capacity is an incredible engineering feat, sure, but it assumes there is a ravenous market ready to absorb all that highly specialized hardware.
Right. And the analysis you shared doesn't just ask us to take AOI's internal projections at face value. It actually provides a crucial piece of external macroeconomic evidence to validate that demand.
Right, the Lumentum data point.
Yes.
The text references the earnings report of another major player in the space, Lumentum, as definitive proof of the current industry environment. And the specific quote regarding the broader market dynamic is staggering.
It really is.
The quote is, "And anything they make, they sell out."
Anything they make, they sell out. I mean, from a macroeconomic perspective, that single sentence changes the entire calculation of AOI's capacity milestone.
So what does this all mean? Like, if a competitor is selling out of everything they can physically manufacture, how does that directly translate to AOI sitting on a potential gold mine?
Well, if we connect this to the bigger picture, it highlights a profound structural reality in the optical networking market right now. We are experiencing a hard capacity bottleneck, not a demand bottleneck.
Okay, those are two very different things.
Very different. And the broader market algorithms often confuse the two when they see companies spending heavily on CapEx.
Because a demand bottleneck means your engineering and manufacturing are running flawlessly, but your sales team is struggling, right?
Exactly.
Like, you have warehouses packed with incredible tech, but you have to slash prices, run aggressive marketing, and fight tooth and nail for every point of market share.
Which obviously compresses profit margins and signals industry stagnation.
Right.
But a capacity bottleneck, is the total inverse of that. It means the customer base has an insatiable appetite.
Yeah.
They're practically banging down the doors of the factory, willing to pay a premium, begging the manufacturers to run the assembly lines faster.
They just can't get enough.
The product is essentially sold before the raw materials even arrive at the loading dock.
And the notes specifically link this relentless purchasing power to hyperscaler demand.
Yes.
And we are talking about the absolute titans of the tech world here.
Yeah.
The companies building the massive cloud computing environments and AI training clusters that power the entire modern global economy.
The hyperscalers are engaged in a historic arms race right now. I mean, they are building data centers packed with tens of thousands of advanced GPUs to train next-generation artificial intelligence models.
It's unbelievable scale.
It is. And the primary limitation these tech giants face right now isn't compute power. It is the speed at which those thousands of GPUs can talk to each other.
Ah, right.
If the data can't move fast enough, those incredibly expensive processors just sit idle, waiting for information.
Hence the desperate need for 800G transceivers.
Exactly.
They need to move data at the speed of light at unprecedented volumes just to keep the AI training models fed. So if the entire global supply chain is tapped out, if Lumentum is selling every single unit they can assemble, then AAOI, bringing a massive newly stabilized capacity of 100,000 units per month online in Q3, isn't just like a nice operational update.
No, it's a game changer.
It is a highly lucrative structural advantage. They are unlocking the exact component the world's richest companies are fiercely competing for.
The timing is impeccable. They have scaled their production capability at the exact historical moment when the market's appetite for bandwidth has become virtually limitless.
The detective work here is incredibly sharp, linking those external industry sellouts to validate the internal capacity scaling.
Right.
But we do need to do a reality check on the actual numbers provided in the text.
Right, the financial.
Because earlier, the analysis argued that nobody should care about the current financials of a 2027 forward growth story.
Yeah.
Yet it goes on to explicitly list those current financials anyway.
It is the classic paradox of forward-looking analysis. The underlying premise is focus on the future, but you cannot entirely ignore the math keeping the lights on today.
Here's where it gets really interesting, though, because the actual financial numbers provided directly contradict the idea that the current state of the company is something to ignore.
Right.
The data reveals a roughly 29.2% non-GAAP gross margin on about $151.1 million in revenue. And then it points to the Q2 guidance, which is projected to leap to between $180 and $198 million.
Keep in mind, this is the very same earnings report that triggered a negative market reaction.
Which is wild. I mean, I am looking at a jump from 151 million baseline to a potential 198 million in a single quarter.
Yeah.
That is not a company just treading water while waiting for 2027. That is serious near-term momentum.
Exactly. But the metric that demands the most attention there is the 29.2% non-GAAP gross margin.
Okay, why is that so important?
Well, in software development, margins can routinely hit 70 or 80% because the cost of distributing a digital line of code is practically zero.
Sure.
But in hardware manufacturing, where you are buying rare earth metals, laser diodes, paying for cleanroom robotic assembly, and managing physical shipping logistics, a nearly 30% gross margin is incredibly difficult to achieve.
It means that for every dollar of revenue coming in the door, after covering the direct physical costs of building the transceivers, they're retaining, 29 cents to fund their operating expenses, their research and development, and crucially, their physical expansion.
That margin proves their manufacturing process is highly optimized.
Right.
Because if you were trying to scale up to 100,000 units a month on a razor-thin 5% margin, any slight disruption like a spike in material costs or a temporary drop in yield rates will instantly push the company into the red.
It makes growth incredibly fragile.
Exactly. But a 29.2% margin provides a tremendous shock absorber. It is the financial engine that actually funds the hyperscaling.
So the whole narrative of ignoring the financials is actually a bit of a misdirection by the source material.
Yeah, a little bit.
The current balance sheet isn't irrelevant at all. It's the bridge. That 198 million Q2 guidance is generating the capital required to keep the lights on, run the factory, and set the stage for that massive Q3 capacity to fully come online.
The foundational strength is already visible. I mean, the short-term market algorithms likely looked at a solid quarter, saw heavy CapEx spending, and decided the immediate earnings per share weren't high enough to warrant a stock bump.
They missed the forest for the trees.
Completely. They failed to realize that the current revenue and healthy margins are exactly what is financing the 2027 hyperbolic leap. They basically punished the company for buying the concrete needed to build the skyscraper.
Wow. That completely reframes how we should interpret earnings reports in the infrastructure sector.
It really does.
Let's do a quick recap of the massive ground we covered today. We started with this jarring market disconnect, where AOI's positive quarter was seemingly punished by myopic algorithms. We unpacked why evaluating a 2027 hyperbolic growth curve requires looking past the 90-day window and focusing on physical manufacturing milestones.
And we identified that critical milestone, which was surviving the valley of death, to achieve a stable capacity of 100,800 G transceivers per month.
Which, again, is a staggering feat of precision engineering.
Really staggering.
Then we looked at the broader macroeconomic picture through that Lumentum data, discovering a severe industry-wide capacity bottleneck where hyperscalers are just devouring every optical component available.
And finally, we examined the current financials not as an endpoint, but as a bridge. The 29.2% gross margin and the strong Q2 guidance provide the exact financial stability needed to support the massive Q3 capacity ramp-up.
It just completely changes the lens through which you view a stock chart.
Absolutely. And for you, listening right now, the takeaway extends far beyond a single tech company.
Yeah.
The market is drowning in noise. Reacting to the daily fluctuations of a scoreboard designed for short-term traders will always leave you a step behind. The real advantage lies in identifying structural, physical shifts in how technology operates. Understanding the fundamental difference between a company struggling with demand and an industry physically capped by capacity allows you to see the blueprints of the future before the rest of the market even realizes the foundation has been poured.
Beautifully put. Which leaves us with one final, slightly unnerving piece of the puzzle to think about.
All right.
We've discussed the insatiable appetite of the hyperscalers, these massive tech conglomerates driving this entire demand cycle. The data makes it clear that they are blindly purchasing everything the global optical supply chain can physically manufacture.
They are vacuuming up hardware capable of moving 800 billion bits of data per second, and they are doing it as fast as the lasers can be aligned.
Right. So here is the thought I want to leave you with today, a question to mull over as you watch the tech sector evolve. If the world's most powerful companies are so desperate for unprecedented data transfer speeds that they are buying out the entire global supply of 800G transceivers, what massive, unadvanced technological leap are they quietly building behind closed doors?
That is the big question.
If they require infrastructure that moves data at a scale previously thought impossible, what exactly is that data going to do when it arrives?
Something to think about.
Definitely. Keep bringing that incredible curiosity. Keep sending us your most intriguing financial notes, and we will catch you next time as we continue to dive deep into the forces shaping our future.